Hello everyone and welcome to CW's webinar covering the main highlights from Global Cement Trade Price Report, fourth quarter 2017 update. My name is Teja Vukicevic and I am an associate analyst with CW Group, and today my colleague Felipe and I will walk you through some of our main topics from our latest GCTPR update. We will begin shortly with a short introduction of our company, CW Group. Then we will continue with the presentation of our trade price report and with a short presentation of our methodology. And then we will move to the main highlights of our report, which include gray cement FOB long-term pricing, gray cement traded volumes, as well as the main exporters. We will also take a look into the regional future trade, and also this time we will take a look into domestic pricing and outlook as well. And as always, we will end our presentation with some closing general observations. We would be happy to answer all of your questions regarding today's presentation on the email inquiries@cwgrp.com or on my email tv@cwgrp.com. Also, just to mention, shortly after the webinar, you can find our presentation and the recording on our site. CW Group is a leading specialty advisory, research and business intelligence boutique with a proven global track record in helping investors, multinational institutions, financiers in taking highly informed business decisions. We are also providers of specialized consulting services, supporting a diversified range of clients with M&A, due diligence, and market reporting services. CW's set of activities is divided into three branches: advisory, research, and media. In our advisory branch, CW advisory team is made out of trusted strategic consultants and M&A advisors who enable senior clients to solve their most challenging strategic, financial, operational, and due diligence issues. We have also helped industry professionals from the petrochemicals, cement, lime, and metals industries, and we have also supported important financial institutions in taking major financing decisions. We have a very dedicated research team which provides rigorous analytical insight by means of conducting leading syndicated multi-client reports and specialized business and sourcing intelligence. As part of our portfolio of reports, noteworthy to mention are our industry reports, lime report, petcoke, and refractories, and very dedicated biannual forecast report on cement industry that is coming out next week, which is Global Cement Volume Forecast Report, GCVFR. And then we have trade reports, price assessments, specialized industry reports on cementitious materials, aluminum cement, oil well cement, and white cement. And last but not least, our media branch is providing leading coverage of core industry segments through multiple channels, including online analytics, our publications, magazines, news platforms, and other interactive formats. Now I would like to say something more about our global cement trade price report. This is a report that we release on quarterly basis, and it can be purchased with the annual subscription. It includes qualitative analysis on volumes, prices, and trends in global markets, as well as market information for key markets around the world. It offers more than 70 countries for trading data, for which we analyze 9 months of historical information with current quarter estimated and next quarter forecasted. Ex-works and retail level pricing and outlook is included as well, supported by individual companies' performances for the quarter in their respective markets. What does the report include? In the report, we monitor trade prices and volumes, import and export for 4 cementitious products, which are grey cement, white cement, clinker, and slag. With historicals, we do provide the preliminary estimates for the current quarter, in this case for fourth quarter 2017, and we also provide forecast of the trade, ex-works, retail prices for the next 3 months. The report is updated quarterly, while our statistical models and forecast coefficients are updated every second quarter. You can purchase the report on our website or by contacting our sales team. And you can get just a hard copy or hard copy version supported with Excel data, which can come pretty in handy if you're in a hurry to use the data, since Excel is usually sent earlier on emails before the hard copy arrives to your address. Each update, we make some revisions in our report, and this update we incorporated preliminary estimates for the current quarter for all countries and flows that we observe. Also, we expanded retail price market coverage by adding countries like Argentina, China, Oman, South Africa, South Korea, and Tunisia. And then in trade prices, we expanded the coverage by adding Peru, Mozambique, Kenya, Algeria, and Norway. And the most importantly, in this update, we started forecasting ex-works and retail prices, and we introduced retail prices in USD dollars instead of indices as we did previous updates. In our forecast methodology, we look at country by country, product by product, and flow by flow time series regression methodology. Our square values are consistently above 95%. Current quarter data points are preliminary estimations, where we estimate price points for periods where no observable data is yet available. Usually these data points are designed with P as in preliminary, and they're expected to be revised in future updates of the report. Moreover, in forecasting data for largest exporters and importers of cement and clinker, we use more in-depth statistical models that use multivariate data sets. Trade price forecast models in this case incorporate freight rates and future exchange rate monthly variables. I would like to mention also that after the data collection, we process our data in the database to get rid of something that we call data noise, where we apply filters, which we eliminate inconsistent and insignificant trade volumes, and we remove unreliable prices from the analysis. As I already mentioned, in this update, we made some fundamental changes as we started forecasting ex-works and retail pricing. Similar to the trade price forecast, ex-works and retail pricing is forecasted for the following quarter. For example, in this report, forecast includes prices up to March 2018. CW Research forecasts both types of domestic prices based on time series regression, taking into account seasonality as well. We take into consideration the market correlation between ex-works and retail prices while forecasting in order to provide a more accurate representation of future market dynamics. As far as our geographical coverage is concerned, the report covers more than 70 countries for trade, prices, and these countries usually account for more than 90% of trade volumes at the global scale. Also, as I said, we look at domestic pricing for the main markets, which includes retail and export prices. Every update, we try to expand our coverage, especially for exports prices section, where we try to incorporate companies' expectations and insights and strategies regarding future domestic pricing. Now, let's take a look at demand movements in domestic markets across the globe. The slide is showing some of the highlights of latest demand movements. For example, as you can see, in India, cement demand is estimated to have decreased around 3.6% year to date until November. This was mostly due to the latest hike in the import duty on petcoke that went up to 10%. The cement industry in India is the largest user of petcoke and that impacted the demand. Additionally, on the contrary, to the first half of the year, even housing and infrastructure construction activity was a bit less intense, mainly due to the new regulations to ensure better home buyer protections. Then you can see that in the US, cement demand rose. It rose by around 2% year to date in September 2016. I'm sorry, 2017. It was mostly on the back of the continuing recovery of the economy, as well as of growing residential and infrastructure construction. Also, spending directed towards the infrastructure sector also helps to sustain the growth of cement demand in the country. The government also plans to reduce taxes in construction sector, which should in future potentially give a boost to the cement industry as well. While in China, on the other hand, Chinese government's environmental sustainability efforts have led to a cement output cut. Therefore, the production decreased by around 0.2% year to date until November 2017. A supply shortage of cement since September kind of really led to suspensions in construction projects, including some key governmental projects. The government has gradually imposed some administrative constraints on the supply side of cement production as well, through such measures as shifting production to the peak, raising electricity prices, further strengthening environmental protection. Then, for example, in Saudi Arabia, cement consumption has been declining for a long time, and in 2017 decreased around 15% year to date to November. It is usually, as usual, due to continuing slowdown of domestic construction industry and bad macroeconomic environment. In addition, the government continues to maintain the export tax of 50% that they implemented in July 2016, which doesn't help to an already oversupplied market. Nonetheless, cement manufacturers in the country, they have some hopes for the industry to grow in 2018, thanks to the incentives of the government on increasing spending in construction and increasing spending in basic materials for construction. If you take a look to this slide, you can see the chart is showing a long-term trend for FOB cement prices. More precisely, this chart is showing the behavior of median, top, and bottom export prices for grey cement on monthly basis in a set of more than 70 countries that have reported in that month. This average is not average weighted by volumes, is an arithmetic average. Taking a look at at trade prices and how they have trended, we can see that medium prices have been on kind of a stable trend in last 3 months. In July 2017, median FOB price have recovered and started increasing until they decreased slightly again in September and stabilized around $60 per ton. More precisely, we estimated the preliminary FOB price on average to have reached around $60.1 per ton in December 2017. However, those estimated price points are going to change more materially in the next update, when we will have available and updated data for that quarter. Moreover, top prices for more expensive exporters have been decreasing since November. The highest prices have declined from around $147 per ton to around $140 per ton from October to November. The most expensive grey cement usually comes from markets such as Canada, United States, Denmark, Luxembourg, and others. Bottom prices, however, they have been slowly recovering from very, very low levels that were observed at the beginning of the last year. The lowest price that has been recorded and that we observed was in January 2017, when it stood around more or less $31 per ton. Last observed quarter, fourth quarter of 2017, recorded prices to have been stabilized around $36 to $37 per ton. Some examples of markets that have the cheapest cement are Turkey, Iran, Asian markets such as Korea, Vietnam, Japan, where because of fierce competition they are trying to make their prices even more lower. On this slide, we can see how the global cement trade movements look like. Global FOB prices for grey cement in this chart above represents average of prices for all markets that we have in our set that was observed, and they are weighted by volume. In this case, global FOB grey cement prices have been on increasing trend and have been kind of stable this year. Starting from February 2017, prices started gradually improving. In the last quarter of 2017, prices improved in most of the regions when compared to the same period last year. That strong year-on-year growth was caused mostly by increasing input costs of production that was coupled with recovered macroeconomic conditions in major markets, and of course therefore improving the cement demand. The chart below looks at global trade and major exporters for the last quarter of 2017 with the preliminary data estimates. As you can see, our analyzed global traded volumes for the commodity decreased from the previous quarter by almost 9%. We believe that removed capacity in some main markets was the cause of lower volumes and seasonality in some other markets. Moreover, in some major exporting regions such as Mediterranean basin and its markets, grey cement exported volumes were affected by growing domestic demand. In Middle East, for example, major exporters are struggling with overcapacity still and inability to move the commodity out of their domestic market. And of course, as I already said, in Saudi Arabia is facing export duties on cement, which challenges its position on international markets as well. In fourth quarter 2017, Chinese producers exported far less of gray cement than last year, which impacted global volumes as well. In China, the cement market is facing with capacity eliminations and production decrease. Therefore, export volumes remained low as well. Well, nevertheless, China stood as leading exporter in the fourth quarter, accounting for about 12% of total exported volume in that period. Thailand exported around 3% less than in the same period last year. The exporting scenario there is changing a bit since the main importing destinations such as Myanmar and Laos are increasing their domestic capacity. They're becoming more and more self-sufficient. And therefore, they imported less of Thai cement in the quarter. Japan, for example, exported about 1.4 million tons of cement in the last quarter 2017, which showed a significant year-on-year increase. The most of cement from Japan went to Singapore. Rising cement demand in the country is keeping Singapore as top destination for Japanese cement. In response to increasing demand, Japanese cement manufacturers even opened a new cement silos in Singapore, which made the trading between two countries much easier. Meanwhile, Turkish manufacturers moved a bit lower volumes year on year in fourth quarter 2017. However, Turkey stood as the fourth largest exporter of grey cement with a trade share of 9%. Most of Turkish cement went to the US, where need for Turkish cement export is backed by, as we already saw in previous slides, by an upturn in construction activity and in both residential and infrastructure sectors. Now I would like to talk a bit about the forecast, the outlook for FOB grey cement. On this slide, first I would like to start actually with our forecast methodology. As I already mentioned, is time series regression, where we update our coefficients every second quarter update and fourth quarter update of the report, which means this update of the report, our coefficients were rerun. Regional averages in the chart represent arithmetic averages, not weighted by volume, since we do not forecast volume. And I would like to mention that in this update, we also introduced a forecast error for each export prices for each of our products. And in this case, CW research forecast error for grey cement export prices is 6.1% for 1 month in period, 7.4% for 2 months in period, and 7.3% for 3 months in period. And now, as you can see, most of the regions will see stable pricing in the first quarter of 2018, with standout decreases in North America and Caribbean and Scandinavia and Baltics regions. By March 2018, global export prices in Asia-Pacific Japan region are expected to slightly improve by 0.2% compared to the price from December 2017. We are expecting to see prices in this region around $50 per ton in that period. It's worth mentioning that the biggest increases are observed in China, where export prices for grey cement are projected to increase for about 4% quarter-on-quarter by March 2018. As already mentioned, measures to reduce pollution during the peak heating season are continuing to support that price hike. But on the contrary, in India, India will experience a decrease in FOB pricing in the following quarter. Actually, around 10% quarterly decrease. In Middle East, we are expecting to see a marginal decline, as prices are expected to go down by 0.2% in March 2018 as compared to the last month of 2017, December. However, if we look on year-on-year basis, prices have been slightly recovering actually in the Middle East. Ever since Saudi Arabia imposed those export controls and duties on cement, the Saudi cement has become unavailable to neighboring importing markets. Following that scenario, other exporters such as Iran and UAE are still trying to increase their market shares within the region with more affordable cement. In Mediterranean basin, in the fourth quarter of 2017, we saw prices around $52 per ton, and we expect them to increase very slightly by 0.5% in March when compared to December. Prices have been gradually increasing as well in this region, but especially due to the higher costs of production, such as electricity tariffs and higher labor costs in markets such as Spain. But in Greece, for example, Greece is experiencing a price hike caused by higher demand in its importing markets, such as US and UK. And Turkish construction sector is stabilizing. Its solid performance is expected to impact the FOB price improvements as well. Western Europe, actually, the trade prices there are expected to marginally fall by around $0.4 per ton by March 2018 as we compare it to December, which represents around 0.5% decrease in that period. That is expected to be mainly caused by an unusual slower demand in winter months. While in the last quarter of 2017, Western European markets actually experienced higher prices on the back of constantly increasing input costs and rising domestic demand in some markets such as France, Germany. That would be almost all from me. Now I would like to pass it to my colleague Philippe, who will talk to you about ex-works prices and the way they trended, as well how in future they will trend. And later on, we will finish with some closing remarks.
Hello everyone, and thank you for joining us today. I'll be walking you through the domestic prices section now, and we'll start by taking a look at the map of ex-works prices year on year for our selected countries. Looking overall, if you take a gaze at it, you'll realize that cement prices have been expanding on a yearly basis across most countries. This is owing to three major focus points, which is the USD depreciation against other currencies. All of our prices here presented are in US dollars, and considering the dollar performance as a currency, it has allowed for other prices to rise a bit artificially and not so much due to other inputs. Another major cause is higher input costs, be it through fuel costs or higher clinker costs, which has been affecting most major markets. And lastly, we have been witnessing a strong construction activity driving positive demand for cement, which has been a boon for the industry, which had where major markets had been struggling beforehand with declining construction activity. Now, panning at the map, we can notice that Latin America is a bit of is showing a bit of a mixed trend, with countries like Argentina and Mexico facing a high surge in prices. This is owing to fast-growing demand for cement. In case of Argentina, it's owing to public construction work, which has recently spurred construction activity in the country. On the other hand, the region continues to be weighed down by Brazil, who is still suffering from their crisis, and prices have been on the slow side. They witnessed a small re-emergence during the third quarter. However, that wasn't enough for the environment to change, and they continued to deteriorate afterwards. In Europe, we are witnessing strong performance across the board. This is mostly due to the euro appreciating against the US dollar, which is causing prices to artificially rise, with the exception of a few markets such as France and Italy, where prices have been growing even in local currency. The region is characterized by positive demand, which is expected to drive a stable pricing environment in the future. Lastly, in Southeast Asia, it was a region strongly characterized by strong pressures, which have been putting prices downwards. However, in the fourth quarter, we observed this trend to see a slight reverse, as countries such as Indonesia have benefited from strong demand increase above expectations, which have led down the desperation from local producers to export in order to sell their stocks of cement. We'll move on now to some country close-ups. Starting with the US, the country has been witnessing a strong construction activity, driving demand upwards, particularly in Texas and California. And year on year, we are witnessing a 7% increase in ex-works prices. In Chile, the situation is a bit more peculiar. In November, the economy jump-started, driven by the manufacturing and mining sector. This sparked pricing increases across the nation, resulting in a 14% year-on-year retail for the fourth quarter of 2017. In France, as we spoke previously, the strong demand is boosting prices, while in Saudi Arabia, large stocks of cement and clinker have not been aiding an already poor performing economy. It still remains unclear when the turning point for Saudi Arabia will begin, as the country continues to struggle with overcapacity and the economy hasn't been performing so well lately. In China, we see the largest increase of a 36% year-on-year increase in retail. This is owing to a mixture of the government's measures to cut overcapacity, coupled with the measures applied to combat smog in the country. This is leading to cement and clinker shortages in some Chinese markets, which is driving the prices upwards. Lastly, in Thailand, we witness a particular scenario where in local currency, prices are actually facing a decline. Nevertheless, with the the US dollar depreciation, they are getting artificially higher cement prices, which is harming the country's performance as an exporter, as prices become artificially more expensive and therefore making it harder to export. Now, looking at the outlook for domestic indices, we can witness some various trends across the region. Noteworthy is that in North America and Western Europe, even though demand tends to slow down during the winter months, we still expect prices to rise as a result of the positive demand trends that we have been observing. In South America, the situation is a bit more unfortunate, with the further Brazilian pricing deterioration driving the regional average downwards. This happens in our analysis mostly due to our regional averages being weighted on consumption volumes for cement. When it comes to the Mediterranean basin, we are witnessing a gradual recovery of the Egyptian ex-works cement prices, which is causing the average to go slightly upwards. The country will still continue to be witnessing prices much lower than in the previous year. However, due to the stabilization of the currency at last, and to more stable inflationary trends, we expect this to gradually recover and prices to gradually rise, even in the following quarters. In Asia Pacific, we expect prices to stabilize and even gradually rise, following what we've already spoken about competition environment being lower and companies being able to afford risking higher prices in order to increase their margins. Lastly, in China, we expect prices to still rise above the current levels, as the smog combating measures will last until March the 15th. Despite this, we expect prices in the second quarter of the year to gradually turn downwards as the shortages go away and the economy stabilizes. I will now move to Teo Vukicevic for some final remarks.
Thank you, Felipe. Now I would like to mention just a few closing remarks and observations to conclude this webinar. As you already said, we have seen global volumes for grey cement decreasing in the fourth quarter of 2017 year-on-year and quarter-on-quarter. Global grey cement FOB prices were up 7% year-on-year. We expect prices to stay more or less stable for the most of the regions. Also, clinker volumes were lower than last year's levels, while FOB rates increased for clinker. However, global slag FOB prices fell as compared to those in fourth quarter 2016. Now, before concluding finishing this webinar, I would like to remind you that the webinar showed only a few highlights from our trade report with a focus on, of course, the most traded commodity, grey cement. And also I would like to invite you to contact us in case of any questions or inquiries on these emails that you can see on the screen. And thank you all for listening and have a nice day.